Thank you for joining us on AWANI Review. My name is Cynthia. 2022 is shaping up to be an important year for digital banking. Bank Negara Malaysia is set to issue 5 digital banking licenses in the first quarter. Yeoh, head of KPMG's financial risk management in Malaysia, joins me now. Cindy is also the fintech and digital banking lead in KPMG Malaysia, and she's definitely been keeping a close eye on the developments on digital banking and digital finance. Great to have you here on the show, Cindy. Thank you so much for your time.
No problem. Thank you very much for having me, Cynthia. Pleasure to be here.
So before we start about talking about who are the contenders and also how this will shake up the financial services industry, let's talk about the digital banking license itself. What does it aim to do to the overall financial services sector in Malaysia?
Thank you, Cynthia. Yeah, so on digital banking in Malaysia, what our regulators sought to achieve through the license issuances is to mainly address our national agenda of having higher financial inclusion and to improve financial literacy as well. There are also key, I suppose, objectives involving things like introducing innovative technologies to the Malaysian banking landscape. And this would be something which is quite consistent with what we see regionally as well, right? So regional countries are also introducing the licenses for this particular objective, right? Bringing innovative technology to the marketplace, to the financial services. Yeah.
All right, we'll get to inclusivity a bit later on in the show. Let's talk about the players. Who are the key contenders? I heard there were as many as 29 companies that applied for the license from Bank Negara Malaysia.
Yeah, so yes, there were quite a lot of applications to Bank Negara, and it's interesting to see the mix of applicants, right? The types of applicants, and we have many non-banks who are participating. We have large conglomerates who are participating, e-commerce companies, and many technology firms as well. So all sorts, right? But one thing that really is quite obvious is that there are very, very few financial services or traditional banking institutions that are participating in this. Where they are mainly, I suppose, joint applicants, and they would not be playing that main role of leading the application per se, right? Again, I think this is also consistent with what we're seeing in different markets, right? And for Malaysia, it is really because the conventional banks, they don't really need to apply for a digital bank license because the current banking license already allows them to conduct their businesses across various platforms and channels. So they can already run digital banks. The only difference between the digital bank license, one of the main differences between the digital bank license and the conventional banking license would be that the digital banks will not be having any branches at all. So there will not be any physical branches, right? And obviously there will be other requirements which are slightly lesser at the start of the operations for the digital banks. Yeah. So you will see, you have seen, or you will see a lot of the applicants and the likely holders of the new digital bank license to be more non-bank, obviously, right? So e-commerce, telcos, companies like that.
I think with the exception of a few players, most of these experienced digital bank aspirants have not really publicized their aspirations. I'm not sure if you've seen over the past week, one of the applicants have been spotted putting up vacancies for digital banking roles. Of course, this is ahead of the Bank Negara announcement. What does that tell us? Are these applicants already ramping up in preparation? How soon can we see this in place as once Bank Negara gives up the licenses?
I guess they are going through the motions right now, right? So the Bank Negara is meeting up with the potential applicants, potential shortlists, and also the potential finalists. So they are going through a series of questions, interviewing them, making sure that they are the right candidates to hold these banking licenses in Malaysia. In similar fashion, other countries have done the same, right? So many of the applicants would also, in their own way, start to gear up to operationalize where they feel confident of getting the licenses. Many of them also would take the perspective that, okay, even if I do not get a digital bank license, I could also be operating some form of a digital financial services anyway, right? And I guess it's also worthy to note that there are different types of banking models nowadays in the market, and they're already operating in the world, where you have even things like banking as a service. So even if you don't own a digital bank license, you can still have services or solutions which are similar to the digital bank. It's just that you don't own the banking license, but you still operate as offering certain services such as a bank, right? So I think everyone got really excited when they saw news and or they saw the listings, right? I suppose, you know, you could see it as you can interpret it as different ways, and I'm not going to say anything about it. I guess if you were to observe how the market is, we are evolving. So banking could be of banking services, right, could be offered in many ways as well, not just through a conventional brick and mortar bank.
But what does Bank Negara look for when giving out the license? What are the criteria? I think more so in the impact of giving out those licenses and the impact to customers, to you and I, people like us.
Yeah. Well, firstly, if you make reference back to what Bank Negara has stated in the objectives, right, it does really look at financial inclusion, literacy, and technology. Through our engagement with various people in the market and through our understanding of the work locally and regionally, what is very clear is that the objective is I suppose we could say that it's very, very consistent, right? In a sense that when we have these conversations and we go through the plans, what we aim to do is to make sure that the applicants do want to meet these financial inclusion, financial literacy objectives. You really should be introducing innovative technologies because it's all about, well, technology is one of the main ways that you're going to be able to reach out to those who are in need as well, right? And I think above it all, the important thing is also to make sure that the successful applicants are very sound in their operations, in their financial standing, right? So they are able to carry this implementation and to roll out, right, the digital bank in a very financially sustainable way, socially sustainable way. Banking is not something that you do for 5-10 years. It's a very long journey, and you have to be there, right, for the long run. The objectives are also things that we want to achieve for the long term, and for the benefit of the country for the long term, right? So applicants have to demonstrate that they are here for the long run, they are able to sustain this, they have the commitment to continue the business for as long as they can, right? And forever, right, if possible. So I think financial stability of the applicants are also very important.
Okay, so sustainability, a key point there.
Yes.
For customers, users, how is a digital bank different from traditional banks in terms of offering these banking services, which you and I are already using? For instance, e-wallet, banking services via the application, opening accounts these days. You don't even need to the branch anymore. So how will a digital bank, which does not have a physical presence, that be different from say a traditional bank?
Yeah, so lots of things, right? So firstly, if you think about how things have changed over the last 15 years or so, 10 to 15 years or so, the way that we have consumed different things in our lives have really changed, from the way we watch movies, listen to music, take a ride, right? Whether it's a taxi or now you hail a car, right? How people and businesses have consumed financial services has also changed. And this is really because of two things, right? Technology, right? Technology and consumer behavior, which consumer behavior is also kind of a product of how technology has changed. So if you look at what we have in terms of technology right now, we talk about the ABCDs of technology. We have, AI, blockchain, cloud, data analytics. These are things that has enabled speed they have enabled accuracy, they've enabled things like natural language processing. You can even get someone to interpret something in Hokkien or Cantonese, right? So things have really evolved over the last 2 decades, in fact, right? And for the new technology companies who are applying this technology to financial services, right? They are here to close a gap which conventional banks may not have been able to do, right? And the only reason why there are these gaps is because of the sheer size of the banking institutions over the years, right? It has grown. We always talk about how conventional banks have a lot of systems, right, in place, and for them to be able to pivot to become more agile could be a little bit of a challenge. But this is, don't forget, in the past, right? So there's nothing to stop the conventional banks to also offer the same things that the new banks can offer, right? So if I go back to what do the digital banks, what can they offer at this point, would be things that conventional banks haven't been able to provide. So, for example, there are certain segments in the market that are typically not serviced by conventional banks, and it's not that there's no interest, right? It's just more of number one, there's a cost to it, cost to serving customers. There's a reason why you're in business. It may be costly to serve certain segments of customers, whether it's because of their credit quality, whether it's just pure maintaining an account, right, to be open, to be laid open for the customer. That costs money as well. Maintaining branches across the country, that costs money as well, right? Even ATM machine, it costs money to maintain this. So I suppose if we talk about digital banks, the difference really is that when we talk about digital banks, you don't have branches. Branches are not allowed per Bank Negara's requirement. You have to have one building, I guess, to maintain your operations, to operate, and for customers to have a point of reference if there is a need to, right? But there are no physical branches that are allowed. Also, as I mentioned before, technology has come a long way. It has become more cost efficient for new fintech companies to provide scale of financial services and products to mass markets. So the cost of servicing customers has also reduced. Like I mentioned, if we talk about where we are 5 years ago and now, what we can see is that we could actually say that conventional banks were slower to adapt, but there is nothing to stop them from adopting this as well and to benefit from what these fintechs are also able to gain traction for, right? Which is technology. And in time, conventional banks could potentially also be looking at the same segment and to support the same segment of customers. From a product's perspective, like what we are consuming, you and I, right? The bread and butter of a banking service is not going to change. You're still going to get things like savings, deposit products. You're going to get your credit cards or your personal financing, mortgage loans, HP. All these are typical things that all banks would have. But I would think that the difference would be how you're consuming it. You might want to take it from a bite-sized perspective, right? There might be segments who don't want to borrow 5,000, 10,000, 50,000 ringgit. What they need is 500, right? So, or you could have customers who will only save at certain periods of the year and they don't want to be paying a maintenance fee every month or every year, right? Annual fee just to maintain a bank account. How do you factor that in? How do you enable that? When it comes to digital banks in Malaysia, where we want to address financial inclusion and improve financial literacy, you might be having products where savings accounts would reward you for good savings behavior, right? Or they could be giving you other types of rewards, other types of benefits by having multiple products at the same time. Or they might even reward you for completing a course that improves your financial literacy, right? Anything is possible in this age, right? And it really depends on what the digital banks want to do and how do you want to benefit your customers. So it comes with a lot of other, I suppose, peripheral but very critical things that support the agenda for financial literacy and inclusion, right? If you think deep and if you think very sincerely, how do I really want to help the consumers? Whether it's micro entrepreneurs, whether it's individuals in the B40 segment or the underserved segment, what can I really do to support them? if it is not just about giving them a product and giving them interest rates which are preferential, but are we improving their financial health? Are we helping them to improve their financial literacy and to be aware of what they're spending on? Do they get enough information about what products can support them in their growth, right? So these are the additional things that digital banks can also do. And it is mainly because if you're starting off from a clean slate, there are so many things that you can introduce, right, for the benefit of your consumers. Yeah.
If there is one, I think, area that maybe the incumbent banks have been less able to serve or provide to the underserved market would be microlending. You mentioned micro entrepreneurs, right? But other than that, some of the services that you've just mentioned will be similar to what traditional banks have to offer. So just how extensive, people talk about disruption, right? Just how extensive disruption towards incumbent banks will be with the inclusion of 5 digital banks.
I don't think that in the immediate term you would really see a disruption because the market segments that we're talking about are quite different. The digital banks will likely be targeting, like I mentioned, B40, B50, right? And also micro entrepreneurs. They might be tapping into certain M40 segments and T20. It really depends on the products that they want to do because it's all about a balancing act on how your portfolio looks like, right? But I don't think that there will be a huge dent. They will not create a huge dent to the conventional banks. And in fact, I believe that there are in some jurisdictions models where there are partnerships being formed, right? So conventional banks actually work with digital banks because of the, like I mentioned, segments. So if the digital bank is able to tap into a segment and to provide specific products and services, as consumers move up the value chain, they might actually feel that, you know, I want to go to a different type of service, right? I need a different type of service levels. Then I want to go to a conventional bank later on, right? It could work that way as well. So it really depends on how the digital bank designs itself and how does the conventional bank respond. One other thing actually that I wanted to mention is that for both conventional and digital banks, right? One very key thing is about the data that they have, and this is so powerful, right? So if we look at how digital, who are the players of digital banking scene and who have been the successful ones? So they obviously are the ones with a huge warm base, right? What we call warm base. So lots of people that they can onboard straight away. And that really translates to helping the digital banks to understand the customers very well, because when you encourage them with more transactions, you also get more data, right? More good quality data, right, to support analytics. When you have that, you also then start to be able to understand your customer better, to serve them better, provide them with service and products which are more relevant to them. And that's where data analytics is so crucial, because once you can get multi-level layers of multi-layered data in for analysis, that really gives you so much more insights, right, to cater to your segments. And that is one space that conventional banks in the past may not have leveraged on so well, even though they may have a lot of access to data, but they may not have used it that well, right? That's another area that we see, you know, will be, it is a very huge area that conventional banks are working on as well, and partnering. So if you think about it, it may not be that digital banks would be, you know, really disruptors to the financial system, but I believe that there is a space for everyone. And if partnerships can be formed, that could be even more powerful for our Malaysian financial services landscape.
That's very exciting, actually. I mean, as a consumer, to have more players in the market. And I think you touched on a very key point, which is technology and data and innovation that digital banking players can bring to the overall sector. Now,
Yeah.
one of the perhaps challenge that may rise from the rise of digital banking is security concerns, because digital banking essentially gives more authority to customers on the onset. So that exposes themselves to more security risks. Does digital banking growth imply more opportunities for cybercrime to happen, in your opinion?
Well, I think that is one thing that our Bank Negara is very careful on as well. So we have very good regulations and stringent regulations when it comes to cybersecurity. So the requirements for conventional banks and digital banks, right, are as tight, right? And we have the risk management in technology, RMIT requirements, and our financial services also comply with international standards. So lots of testings has to be done, lots of levels of security testings, right, need to be proven and to be validated as well. So for banks to eventually launch, right, for the digital banks to eventually launch, there will be various stages of readiness reviews to be conducted as well, and various testings that needs to be done from a technology perspective too. Uh, and from there on, even after you've launched, there has to be ongoing assessments to secure, right, to make sure that everything is secure. And I think this is really a very good point that you've raised, because when we did a survey on customers' readiness, consumer readiness on digital banking, cybersecurity and security in general, right, was one of the main things that our consumers were concerned about, right? So it's also one of the things that we highlight to our clients or any digital bank applicants or aspirants, that uh, it's not just about having the infrastructure right, because like I mentioned, right, you have to have, that's a basic fundamental that you have to have, but it's also about educating your consumers about it, right? You have to make sure that your consumers, your customers are clear about their responsibilities too, right? And they know what they're getting themselves into. And also you educate them to protect themselves, and you equip them with the necessary information and awareness, right? So that they are able to confront this and to manage this too, right? So that is also one part that is very critical. It's not just about financial literacy. Digital literacy is also very key when it comes to consumer. And I think digital banks by nature, the thoughts that would be that most digital banks pride themselves in being for the consumer, right? And they would say that my product is just transparent. You will know exactly what is happening. We will guide you through the process, things like that. So these kind of values should continue and should be strengthened when we talk about rolling out this digital bank to the consumers, the customers.
Just to round things off, I think we talked about the key point here. Really, inclusion is the primary objective, right? And how will digital banking be a value contributor to the financial system when they come on board? And just a final question regarding what it takes to be a successful digital bank. I mean, maybe experiences from Singapore, which has also launched their digital bank. What are some of the criteria do you think would be crucial when these five banks come on board? Hopefully.
So my personal opinion is that there are three things, right? And I also covered this in another recent discussion. And for me, the top three would be that you you need to have a strong team who really understand not just banking technology, but also why the digital bank is doing what it's doing, right? So the management team is very important to drive the agenda through. I mentioned how it is not just about having the right technology, it's about having the right mindset as well, and to make sure that the bank is sustainable for a very long run, right? So you need to find people who fit that bill, right? In terms of that sincerity, right, to run this digital bank, right? That's one thing. Technology, policies and procedure, having a risk management mindset, I think those are all given, right? So for you to run a bank, you really need to have that in place already. The other thing would be about data. I think data is the be all, right? In a way of to determine whether you will be able to deliver the best for your customers, because it's all about understanding your customer. And understanding your customer is also one other thing, right? Together with the fact that ideally you have a one base to work with, but you need to make sure that you have active engagement with the customers as well. So you are able to understand them better, right? So management, understanding your customers, and also the data part, right? These three are very, very critical, I feel, to set your bank apart from others, right?
Right.
Because it shows, right, in the way that you service your customers, it shows in the type of products that you roll out, it shows in how you engage with your customers. What are you giving to them? How is it going to benefit them, right? If you can empathize with your customers, then obviously you would be able to serve them better, right?
Right. Well, thank you so much, Cindy, for giving us that overview of this upcoming digital banking license that is expected to be issued in the first quarter of 2022. Thank you so much for your insights, Cindy. Cindy is the Fintech and Digital Banking Lead at KPMG Malaysia. Hopefully, we can revisit this conversation once the license is issued and we'll talk about this again. Thank you so much for your time, Cindy.
Thank you very much, Cynthia. Thank you.